Well, good morning, everyone. Justin Kringstad, Director of the North Dakota Pipeline Authority. We'll get right into the regional oil production statistics. Some limited information coming out from Montana, so there's still a few month delay here in the information. South Dakota is still continuing that slight downward trend, down just over 10% year over year from September 2018 to September 2019 in that region. When we look on slide 3 at the monthly changes in oil and gas production, again, as Lynn just noted, the decrease both in oil and gas production. Now you can just kind of get a visual reference on slide 3 of what this looks like historically. This was a pretty significant decrease that we saw. You'd have to go back a couple of years to see a month-over-month change like we saw from August to September of this year. But again, as Lynn alluded to, my forecast, my expectations are that as we move into October and in November, we'll be back on that record-setting type production levels going forward as we enter winter, at which time things can again very quickly change. Slide 4, very small changes in what's taking place as far as oil transportation dynamics in the region. Pipeline transportation continues to be the dominant mode of transportation, and I'll comment here in a few moments on pricing and other dynamics that are influencing the decisions that are being made for how these barrels get marketed out of North Dakota. Slide 5 again is that historical look for the last 2 years now. We've seen fairly steady market share percentages, give or take, again on that pipe versus rail conversation. If you look at the blue dotted line, that's our Brent WTI spread that I talk about each month. Again, hovering today right around that $5 to $6, which is really that gray area. Again, if it was much lower than that, we would anticipate more market push towards the pipeline. Again, if it was much higher than that 5 to 6 range, we would expect more and more barrels to get on the rail network, trying to find optimal locations around the U.S. Slide 6, we have seen, again, just minor decreases in the amount of crude by rail exiting the region. And if we look at the destinations of those, again, these are market shares, so market share percentages of a dwindling number, at least as of late. So the West Coast Pad 5 continues to be the dominant location for those barrels, at about 2/3 of the rail transportation out of North Dakota heading west. And we've seen decreasing market shares in that Pad 1 of the East Coast, particularly over the summer with the fire event out in Philadelphia and losing some deliverable options out in that region. And then you'll notice down the Pad 3 Gulf Coast continuing to hold fairly steady in that 5 to 10% range. Again, we do now have some additional pipeline options to the Gulf Coast that we didn't have several years ago. So whether or not that 5 to 10% continues long term for the Gulf Coast, we'll see what the market does there. But if there is any type of expansion work from additional pipelines to the Gulf Coast, that may be some barrels that would be eliminated going forward in the future. And then just very quickly what the refineries around the U.S. were paying. Back in August, the most recent data available, highest market price was in that Pad 5 or the West Coast area, followed up by the East Coast and then the Gulf. So again, very consistent type of marketing trends that we've seen over the last number of months. And then where we sit today, again, that Brent WTI spread just over $5.50 per barrel as of this morning. Again, $5 to $6 is my threshold that typically makes it very clear whether those barrels are going to get onto a pipeline system or on a rail network if they've got that flexibility. And then last but not least on the crude oil side, just a quick update on those barrels moving across the border between North Dakota and Canada. Again, still high number of barrels moving through, coming south. Again, this does include not only truck traffic, but also any type of rail barrels that are coming from Canada through North Dakota's ports and going to refineries around the U.S. And then export volumes are remaining fairly high in that 80 to 100,000 barrels per day being reported moving north from North Dakota up into Canada, primarily by truck. Now moving into the natural gas discussion. Again, a 2% decrease in the amount of flaring. And if you remember a month ago, I've got a graphic to show this on slide 12. But where we saw that decrease was that blue part of the equation, the amount of flaring from wells that did not have a sale connection to them, so which was encouraging to me. And I've got some additional comments here in a moment. But if we just look at slide 12 for a second, from June until September, we have seen month-over-month decreases in the amount of natural gas being flared, and on the opposite side, the amount of gas being captured. If we look on slide 13, this is getting into why did we see a decrease in flaring from wells that did not have a sale connection. If you look at the black line on this graphic, that is the number of new wells selling gas, and then in red is new wells producing gas. So ideally, they would either be in sync with each other, or an even better scenario is when that black line exceeds the red line, which is what we saw in September, a very strong surge in the number of new wells selling gas in North Dakota. And so that was likely a result of 2 natural gas processing facilities that came online in August, getting into more of a full swing in the month of September. As you'll see on slide 14, just in the last several months, we've had 4 major natural gas plants come online or be expanded, totaling over 600 million cubic feet of additional processing capacity here in North Dakota over the last several months. You can see the bottom portion of this graphic highlights the additional 4 major projects that are under construction today for another 600 plus million cubic feet of gas processing capacity. So again, some major investments going on by the industry in order to address gas capture and minimize the amount of flaring that's taking place out in the field. There is a 5th project also that would fit into that bottom tier of this graphic. One Oak is filed now with the Public Service Commission for their Demicks Lake 3 facility. However, at this time it does not have board approval yet, but they are starting at least the permitting work on that facility, so another 200 million cubic feet per day potential should they get board approval to move forward with that facility as well. And then slide 15, just updating the graphic then as we've had plants come online. The peach portion of this graphic that I show each month has continued to grow. And the 4 facilities that I mentioned before are shown in that hunter green. I did not include Demicks Lake until it has some type of formal board approval. But as we move into late 2019 and we start to see numbers early 2020, we will see substantial growth in the amount of volume of gas being run through these facilities and being captured out in the field. And then just again that long-term outlook on slide 16. Again, certainly not done building out infrastructure related to natural gas capture. The industry has a substantial amount of additional investment that will be needed in order to expand processing facilities, gathering capabilities, any type of interstate transmission needs for the region in order to, again, continue to move this gas to markets inside and outside of the region. So with that ends any of my formal comments. I'd be glad to answer any questions on any of these topics.
I'm curious, Hess has got a project in that bottom.
Yep.
Thing. When Hess finishes that, how much gas is being produced at the Hess plant?
So the current capacity of the Hess facility is 250 million cubic feet per day. They do have that joint venture with Targa, which came online in August. That's a 200 million cubic foot per day facility. And then in 2021 is the expansion of the Tioga gas plant for an additional 150 million up at Tioga itself.
So which is larger, is it Hess or the Demicks Lake if they get Demicks Lake 3?
Demicks Lake 3 was proposed to the PSC as a 200 million a day facility. Yep.
I don't really have a question about anything that you just said. This is more a general question that I feel like you would be a good person to answer. I was looking yesterday at some EIA data about North Dakota's monthly oil production, and their numbers differ ever so slightly from like the numbers here the state produces each month. Do you have any idea why?
So the question was on any differences between the EIA data and the North Dakota State. Are you looking at just their actual production, or each month they also do some forecasted production?
North Dakota field production of crude oil, thousands of barrels per day. And if you don't,
Yeah, Lynn, do you have a?
And maybe Lynn, you're the better person to ask that too.
No, I think part of the process is the corrections that we get. So you'll notice, like our leading month, we're talking about September. We call those preliminary numbers, and those go into the EIA. And then the whole month we'll be receiving corrected values from oil and gas companies. So we always our August numbers are final, but actually there'll even be corrections in those, and it takes some time for those to filter through the system to the EIA. So quite frequently, an operator will discover an error in what they reported to us and then correct it through our electronic system. So it shows up in our numbers instantaneously and can take a month to get to them,
Filter through that.
or more.
Okay, thanks.
One question that came up was which board, you had mentioned a board needs to approve Demex Lake 3. What's that approval that it has to run through?
That would go through their full corporate approval. So right now they've just started, because of the potential timelines, they've started the process with the Public Service Commission, North Dakota, but it would, just like any other major expansion or investment for that company, they have to get their full corporate board approval.
I have an off-the-wall question.
Yep.
Based on the discussion about H2S from legacy wells or perhaps from some of the Bakken wells, and the companies that process the gas right now are rejecting that, correct?
Some are. They're,
Some are.
yep.
But is the technology available yet to remove H2S either at the well site or at the plant site?
Yep, so the question is about H2S and North Dakota's gas processing facilities and their capabilities. So as Lynn noted, majority of the investments that have gone in do not have H2S handling capabilities. One Oak has some capabilities they've put in the southern portion of the play, which can address that, but if it's a well that's been developed outside of that gathering network and they're positioned in a facility or in the gathering facility area of a plant that can't handle the H2S, then they certainly have an isolated issue there that they need to address either at the well site or through other means of capture.
I have one more.
Yep.
Unless since there was a discussion about that the pipelines like methane but not ethane, where does the ethane, is that a well site to get ethane out of the natural gas at the well site or at the plant site?
So the ethane discussion, so ethane has flexibility. It can either be what's known as ethane rejection, where it gets sent out with the methane into deliveries to our homes and businesses, or it can be captured in the Y grade or the NGL stream at the processing plant itself. So it's at the plant level that takes place. Again, I wouldn't say necessarily that the pipelines don't like it. There's just a threshold where they've got some downstream customers, and each pipeline network is a little bit different in their tariff specs and what they can deliver reliably to their customers. So yeah, some pipeline systems like the ethane content in there because it means higher energy content for their customers, so they can actually deliver more energy with less throughput through their pipeline systems, and so there's a give and take. It just needs to be handled and balanced appropriately.
I got one more H2S question, if you have
Yep.
an answer. With H2S, I mean, is normally the only way to deal with it just to burn it, because doesn't that convert it into sulfur dioxide? Or is there anything useful that you can do with H2S, do you know?
I don't know I know they can handle it at the process. If the facility's set up correctly, they can safely handle it, but as far as taking it and making it into a saleable product, that I don't know if that's taking place, Lynn.
So there is a world market for sulfur. They can extract the sulfur from it and sell that. But what the gas processors reported to us in the most recent round of meetings is that it's a net negative. They're actually losing money on every ton of sulfur that they extract and produce and try to ship to the market. The world market for sulfur is oversaturated. Almost all of the Mideast crude is sour, produces from sour gas, and the hydrogen sulfide concentrations over there are very, very high. So there's way more sulfur in the world market than there is demand. And so all year long, they've been losing money on every ton of sulfur that they extracted or put into the market. And I think that's what's driving what we're seeing is either companies that have wells that produce H2S are going to have to pay more to process that gas, or they're gonna have to temporarily abandon those wells until the market corrects itself, because they won't, long-term, continue to lose money on the sulfur they extract. It's an expensive process. As far as I know, the only uses are sulfuric acid and, used to be matches, but we don't use so much of those anymore. So I know it's also used in vulcanizing tires. That's what causes rubber to be hard enough to make a automobile tire. So there are a lot of uses for it downstream, but demand is way less than supply right now.
Okay, well, thank you very much.
Who thought that the chemistry